It's about 20 minutes to 2 Eastern time. Lunch ended about, well, the lunch, like I did. Lunch hours like 9:30 to 11:30, so that is 11:30 to about 1:30 Eastern time. Let's take a look at where we are index-wise. So the Dow has widened its loss. It's now down 423. In fact, it looks like all the major indexes are posting wider losses than before we broke for lunch. The Dow's down 1.6. The Nasdaq Composite, or the Nasdaq 100, is down 1.2. Composite's down 1.18. S&P down 1.34, and the RUT is down. The Russell's down 1.3. So the Russell's not even, the worst performer today. It's actually the Dow. What that tells me is that potentially this is a real correction. Although the Russell is kind of confusing because usually because they're small and medium caps, they're riskier, so when there's a correction they tend to have outsized moves. I think I can explain the Dow. The reason why it's such a large loss is that it has been kind of a flight to safety for those who want to stay in equities because it's a blue chip index, and those tend to be a little bit more stable, a little bit less volatile than say your Nasdaqs, your Nasdaq 100s, or even your Russell. That kind of flight to safety is unwinding. It looks like it's those investors are capitulating. Over the break, I was able to actually trade. I was able to catch a trade on the Nasdaq, and turn my small loss into a small gain. The Nasdaq right now is looking pretty negative. The Nasdaq futures, anyway. I was thinking about waiting till this full D kind of it was headed towards this 80 threshold here and wait for that to hit that, but I don't know if that's going to happen. I think the Nasdaq is going to trade down here to about the 6803 level. So if I'm going to catch it, I got to catch it now. So I am going to do that with a stop, with a reasonably tight stop. When I see my opportunity here. I think now is as good a time as any to get in. And hope it doesn't turn against me, which it just did, so that lost 10 bucks. Which, that stop was too tight. Because as soon as it stopped me out, you saw it push down a little bit further. If we look at the stochastics across time frames, we're headed into what's probably going to be a choppy, painful bottoming process from an intermediate or from a short-term time frame. And there we go, we're moving down. I've talked about this before. One of the temptations that you have to fight is to overtrade. You don't want to try and scalp these futures for a few ticks or a few points. Sometimes you just get sucked into that because you get head faked. And now that right there, look at, so I was up 55, now I'm down 50. I had some green on the board, now I've got red on the board. And that comes from having not stuck to my system. Even experienced traders will second guess their system, second guess themselves. The important thing is that if you make a mistake, that you learn your lesson. And the mistake I made here was, normally my discipline would tell me this full D plot wants to get up above 80. And even if it turns down towards 20, more often than not, you're better off just letting it get there before you initiate a short position. So what's going to happen here is, I think that the full K, it's below 20. It's raring to go. It wants to head back up towards this 80 threshold, and when it does, it's going to pull the full D up with it. So right now, this is not a short. This is a chop fest right here. And see, that's not helping my overall number. So Autodesk is hurting me today. The big gain I was showing in the VWO, that was artificial. This call just wasn't trading. Now it's actually traded. And it would surprise me, with the underlying to be down 67 cents, to have this call up 30, like that doesn't make any sense. That doesn't change the fact that I'm glad I put this short call on, because it's helping mitigate this loss. This would be about a 420 point swing. Like, I'd be down over 800 now if I hadn't done that. Apple's continuing to weaken. You can see that the short call spread that I sold is moving to a profit now. If we're to look at the chart, so yeah, we're 162. Remember, 167 was where I put the position on that broken wing butterfly. So this is going to trade down to at least 150 within the next, if I had to guess, I'd say about a week or so. Maybe not. It might hit this MA, this moving average here, and either bounce or kind of tread water for a little bit. But the momentum on Apple is definitely to the downside right now. For all intents and purposes, we still have 2 hours left in the trade, 2 hours and 10 minutes left in the trading day. Yeah, this could reverse, sure, but that is so unlikely. It's much more like we have a bar last week that crossed the stochastic histogram here, crossed. So this is just confirming for us the revenue and the earnings were beat barely. The concern with Apple is slow iPhone sales. Production cuts. We had everybody spooked going into earnings anyway, which is this downward draft that you're seeing here is what fomented that. On the other hand, there was something like a 12 to 15% increase in average iPhone price year over year. That was because the iPhone 10 was so expensive. It was $1,000, $999. And, Apple is getting that money. They're getting more money for a better product. In addition to that, they have, 1.2, 1.3 billion installed devices around the world. That's a services revenue play. So those are bright spots. The analysts that have changed their price targets and downgraded Apple, I don't know if they're right or wrong. I think they're wrong long term. Short term, they may be right. I mean, obviously, the market is telling us that they're right. Amazon. Is interesting. That's about how the bar looked about an hour before lunch. It shot up early in the session up to almost 1,500, and then it pulled back. So if I intend to take a position in Amazon here, I'm going to do so with caution because I'm not sure. I think that this euphoria is going to be outweighed by the overall sour mood that we're seeing here. And I don't know what's going to happen over the weekend. When everyone was complacent and the world was great leading into the end of the year. Things like North Korea missile tests would cause the market to correct a little bit, but then the market would just shake it off. I think if North Korea were to pull something over the weekend, there would be a pretty big drop on Monday. Not saying that they're going to. I don't have any reason to believe that. I'm just saying that's an example of the kind of headline, like the mood shift is important. So this is a shift in sentiment that we're seeing here. And what the market would have shrugged off before, it's taking more. It's going to take more seriously now. So this short call is helping me, but it's not enough now to prevent this from falling to a loss. So we've seen the bottom line here change dramatically. I mean, it was positive. There was a point, not by much. There was a point in time where this was actually positive, but Autodesk is hurting me right now. Ignore Intel. KSS, I don't know what to do about that. Win could be vulnerable. I think my best bet with Win, to be real honest with you, is to buy back both sides of this broken wing butterfly for a profit, with the idea that I think Win is going to be. I think there's a bear. I think Win's going to go down next week. These losses may accelerate into the close, and if that's the case, that helps me. So I want to buy these back at a profit while I still can. I mean, you can see this short put has regained about 110 bucks, $110 of value. So if I look at when, yeah, I mean, everything I'm seeing across. And if it trades down to here, you know, that's still good. Like, I can model this before I make a move. Let's go. So this is me modeling this as if I had bought back those short puts. So if Win trades down, back down to this 160-ish level, then that means what? You know, the 681 loss on the long call is now only a 5.9. So that gains me about 300 bucks. That's at expiration. Okay. It could actually be about an $800 profit if this occurs within a couple of days. And if I'm wrong, and if it starts to recover on Monday, I just get out completely. Because I'm not going to watch a $681 loss. You know, move closer and closer to a full 1556. So that's my play on Win right now. Sometimes it's hard to fight the temptation to like get perfect trade placement. You just want good trade placement. That's how you miss opportunities. Like Win's recovering in price right now, so what that's telling me is, oh, just before, you know, don't close these out yet. I mean, you can close them out for a larger profit. But inevitably what happens is, you know, there's a lot going on. You get busy and you forget about it. Next thing you know, it's the closing bell. And you've missed the opportunity. Plus, just because this looks like it's improving doesn't mean it's going to. I mean, everything is telling me downward pressure here. And I can hear my hard drive grind, and I got something creating a lot of processor overhead. And I don't know what it is. I'm going to have to pay up to close this 270. Okay, that worked. So that's about that part of the butterfly. Like I'm locking in about a $600 profit. Of course, it's offset by the 721 that the long put is down by, but I mean, win is improving a little bit. That's telling me this. So the midpoint is 1130. Oh no, good. It executed. It got filled at 1115, so I didn't have to change it. So that's better for me. That's an extra 15 cents per. That's an extra 15 cents of profit. Let's check back in on the NASDAQ futures. So what's interesting here is that, look, I've been focused on NASDAQ all day, and that probably was a mistake because it's been so choppy. It's been so wishy-washy. I haven't really been following the action on the mini Dow or the S&P. I've just been studying the NASDAQ all day. And that's not a bad thing. I think that there's something to be said against whipping around from futures contract to futures contract trying to find a spot. There's something to be for. Yesterday I talked about getting the feel of the market, like you can almost feel it. Like you're so in tune with the market that you can feel it. Okay, so right here, the low of this time period is this 25,693. Okay, which was only 3 bars ago on a 5-minute chart. If it cracks below that, and I got a strong suspicion that it's going to get ugly. Because I'm looking at the stochastics across time frames, which you can't see right now because it's not in frame. I'll move it over in a second. Now I'm starting to suspect that may have been worth waiting for. I almost feel like I got in too early. But you can see it traded up to this, and this is only a 3-period MA. It traded up there and then it bounced off of that. And the last 1, 2, 3, 4, 5, 6 bars. Okay, so it just hit a new low. So now the question is that a look below and fail, or is that just the start of something bigger? See, my 1 minute chart is almost telling me now that that was a mistake. Because now it's crossing up. Although it's not doing a very good job. You know, the bulls are not doing a very good job of pushing this back up. Because, yeah, now it's starting to deteriorate again. And that is because across all 4 time frames I look at, except for the 1 minute, both the full D and the full K are below, well, shouldn't say that. In the 15 minute, the full D is touching, it's just barely touching that 20 threshold. Not below it, just barely touching. So the bears are now having their way, pushing back towards that low. And this is actually looking like it's going to set a new low, and which it did, 25,691. It's only doing it tick by tick. You know, like it pushes down a tick, then it retreats. It's done that twice already. Like that might have been a good spot to get out, but we're still seeing lower highs and lower lows. There's nothing in the 1 minute that at least right now, there's nothing in the 1 minute that tells me that this move is over. I mean, that can change. You know, we've seen it change so quickly. 25,691. And look at that. I mean, that is just a bloodbath now. And now it's just time to get out. And this is going to keep going down. I mean, you know, isn't that always the way? When you get out, it taunts you. But one of the things about trading is you can't look back. I mean, you have to do so with kind of a measured sense of discipline. Like looking back, you don't do it to torture yourself. You do it to learn something. You know, you don't do it with the attitude, oh, I'm so stupid, I should have held on. Well, you know what? If you held on, you don't know. It would have whipped against you. You don't know how long you would have, you could have stayed too long in the trade. And see, that helped us, you know, erase some of this loss for the day. So I still I don't like how much I've traded today. Like, it hasn't been a lot. Like, I've had days where I've traded a lot more than I have today. You know, I've only done one round trip on the mini Dow, and I did 3 or 4. I did 5 round trips on the NAS. That hasn't changed much. I'm going to look at what I want to do. Autodesk 2 is not. And see, I mean, unless I think it's going to rebound, which is highly doubtful, like buying back that short put alone is not going to do me good. I really just ought to just get rid of the whole. I could also roll it. I could roll that call down. Which would probably be a good idea. Maybe not today. But Monday. See, an Autodesk is within striking distance of this short-term low from today. That says cup and handle there. I thought I saw a cup and handle pattern, but it wasn't on the weekly chart. It was on like a 15-minute chart. It was a different chart. I want to show you something on this VWO. We were looking at, and I think this will help. We were looking at the SPX. So what we're seeing, what I was saying earlier is, okay, so this is now below the upper bound of this price channel. If it closes there, then what that tells me is it's going to continue this move downward. The stochastics are confirming that. Okay, this moving average here is confirming that. Both moving averages actually are confirming that. Now the VWO, I looked at it over the break a little bit differently. And I think this is a good illustration because it's what the S&P might do itself. I drew this channel using the weekly chart to plot it. Right here. No, it wasn't that one. Yeah, it was that. It was a log scale. So it was this one. So if I had drawn, this kind of secondary trend line here, like, because this is moving parabolically up. It hits as high at 50.99 and then it retreats. Okay, so from the week standpoint, even if you look at the day chart, it's showing you the same thing. That this has blown out of the channel and now it's moved back. Now it could have bounced off of here. Remember what I was saying earlier is that there's three options what this can do. It can bounce off and go up. It can kind of move sideways, whether it's above the line or below the line, or it can move down. What it's doing here is it's moving down. And it's going to move down, I think, to about this 47.60 level. And it could even continue down to about 46.10. I think that this midpoint line of the channel is probably the most realistic target. It depends on how long this pessimism continues. But the reason why I showed you that is because this is what I think the S&P is going to show us on Monday. Okay, so something good's happening here. Win is deteriorating. So I bought those short calls back, or short puts back rather, at a good time, because now those profits are locked in. If Win moved down the way it was and I'm still in these, the profit that I had in those would have deteriorated, but now it's helping me on the long side. Apple is continuing. It's down now. It's down to 167.37, 61.37. It was 162 and change before, so that's come down even further. That's helping me. That's helping my the short call that I sold. It's not helping my Bookman Butterfly, but that's going to expire useless anyway. I've already realized maximum loss on that, and that was the beauty of designing it that way. Like, it moved. I was right on the direction for a very short period of time. Okay, unfortunately, it did that in the extended hours. Once the analysts got a hold of it and came out with their downgrades and price target reductions, those gains in the post market deteriorated in the pre market, and carried into the regular session, and it's been a downward move ever since. Coles is deteriorating. This may be a buy back the short put and let the long put ride situation also. This is just a straight vertical, it's not a butterfly. Well, I'm waiting for that to draw. Let's check in with the futures. Yeah, they're much worse than the NASDAQ. And so what that's telling me well, honestly, it's not really telling me anything. I was going to say it looks like the NASDAQ has already done some unwinding, but the Dow has too. So I still do think that this outsized loss on the Dow has a lot to do with some sense of capitulation that, you know, those who wanted to be in equities but wanted to do so in a safe way, like they're unwinding their trades now, like they're getting out. This is profit taking, and it's defensive. So I'm tempted to buy some puts on the DIA. That's the ETF on the Dow. I think I may want to wait though to see what happens over the weekend and see what happens on Monday, and to see if the Eagles win. And that's kind of a funny joke because when the AFC team wins, the Dow, and this is actually like there's some truth to this. It's correlation. It's not necessarily causation. But when the AFC wins, the markets don't do so well the following day. When the NFC wins, statistically more often than not, the markets, the equity indices do well. That has nothing to do with this. It's just a joke, but. See, now with Coles, this is a tough call. This is a really tough call. Although, if I look at it a certain way, like I was looking at stochastics, that's what told me that. And I shouldn't be deceived by what this is doing because my time frame is shorter than that. This spread goes out to, well, it goes all the way out to April. But I still think I can get away with, I can buy this call back, and I believe that Coles is going to move down, especially if it closes below this level here. It's going to come down. It's going to fill this gap. That's what it's trying to do, which, coincidentally, is also roughly the top of this channel. I think I gotta do it. Yeah, that midpoint creeped up on me. I don't want to play games. I'm going to put it in at 9:20. It's probably going to fill at 9:15. No, it filled at 9:20. Thieves, criminals. But I still preserve some of that. Profits now. I just need calls to continue to drive down to that level, that channel, that threshold. You know, kind of fill that gap. Not much change in Apple. Autodesk, that's going to be one we're going to have to take a look at here pretty soon. Win. I'm really happy I did that on Win. Where were we looking? Okay, so right now, what's interesting, it's tempting to look at this and say we're oversold, we're going to have a rally, and we could. I mean, don't get me wrong. I'd say the odds favor that not happening, though, before the close in about an hour and a half. Especially considering this. Like, this market just wants to continue having its temper tantrum. However, I mean, the reality is, now that I take a look at it, like, there is the possibility of a strong rally going into the close. I don't expect that to affect when. Although it might. So here's what I think I have to do. Because NASDAQ's doing the same thing. Although not exactly. The NASDAQ is not showing the same kind of strength, potential. I mean, this here shows weakness. This has not even, this isn't done moving down. Okay? The Dow is. Closer to it anyway, I should say. So what I think is, when I get confirmation here in about a minute and a half, it would be a good idea to put on a long. In fact, I may just do it now. So this is weak. But now it just rebounded. So that's going to confirm. And it just confirmed. Ah. So I was a little too early. if the mini Dow is having a hard time crossing the 3-period MA, that's weak. That's weakness. Yeah, we're going to need to pick a better spot. That's looking a little treacherous. Just make another run up again. See, it's got this in the way, it's got this Bollinger Band in the way, it's got this, it's got these MAs it has to break through, which presents resistance, but if you got momentum that's strong enough behind it, it's not going to matter. Which right now we think we might have that because conditions across time frames are oversold. Now that doesn't mean it can't continue to go down. It can. I mean, it's hard to pick a top or a bottom. It's difficult. But I thought this was worth getting into one more time as it makes a run towards that moving average. No, it didn't. So the thing that has me concerned now is overtrading. So I'm net short right now. If you look at these deltas, Autodesk and Apple kind of offset each other. At least if you talk about delta neutralization. They're not offset. I mean, they're both contributing to losses. I haven't been talking a lot. This is more of just watching, observing. This is very skittish, choppy trade. Which really shouldn't surprise me because that's what's happened. That's what happens when in a certain time frame you're bottoming. So that's all we need is for it to make a complete move. I'm going to make the market chase me. I know that sounds arrogant, but it makes me feel better. The market doesn't care what I do. It doesn't care that I'm... That was a lot of work for a small amount of incremental profit. NASDAQ is down, or sorry, not NASDAQ, the Dow's down 544. That is the biggest move that we have seen in the Dow in a long time. Yeah, the NASDAQ's got more room to fall. If it breaks below that, which it just did, It's not yet time. See, look at that recovery. See, if you would have chased it down, it would have just ripped against you, taking your face off. I mean, that's probably the biggest down move in the last year. $29.56, 26.68. So that's 280. It's not three. It's not close to 500. The last 5 years. Now, I read that the Dow was on track for an 800-point drop for the week. That's a 4. I don't know what keeps doing this to me. There we go. That was about a 540-point move. That occurred June. So that was actually that was right after Brexit. So today is the biggest down move in the Dow that we've seen since Brexit. Here's the play. It's going to be the NASDAQ. This has room to run. The mini Dow is so oversold as it is that it's just a chop fest. The RTY, the Russell futures, not quite as appealing. And the S&P is definitely not appealing. So when we get a signal, when it's the 1 minute chart tells me we're overbought, it's time to go short. And maybe not write that into the close, but I mean, I think it's going to be a good setup. Because the Dow is now down 2.16%. Dow futures are down 2.2. What's interesting, VIX is up 26%. Gold's down. So it's not performing its role as a traditional flight to safety. The DX, that's because the DXY is up, the dollar index is up. It's suppressing that. Which, if I had to guess, I would tell you that the yen, the Japanese yen, is probably also down. Which it is, 0.75%. Okay, this is just bad selling. So now we just hang on to our hang on to our hats. Because this momentum is so clearly to the downside, it doesn't matter that it's in a bottoming. This is a lot of longs capitulating. Holding on to profit while they still have it. Hey, look at that. We swung to a profit for the day. I will say one thing. I am not happy with the scalping nature of my futures trades today. That is one thing I need to look at. Because it means I left a lot of money on the table in the interest of, and that's fear. Okay, remember we talked earlier about managing fear and greed. This is the logo for my channel, okay? My son drew this, but greed and fear, like I think this is a good representation, okay? They are out to get you. They will bite you, they will poison you any chance they get. And if you aren't strong enough to control them, you have to get there. You have to. You can't let greed make you chase something stupid. You can't let fear, which is what I've been failing to master today, cause you to take profits too quickly. Now, you don't want stupid, you want greed. You don't want greed to cause you to stay into the trade too long, like you'll wear out your welcome. You don't want that. It's a tough balance, it really is. It requires a lot of focus, discipline, patience, and self-awareness. And honesty, rigorous self-honesty. If you can't be honest with yourself, now I'm not saying beat yourself up, like don't do that. There's such a thing as too honest, you know. We're now on a 632-point drop on the Dow, 134 down on the Nasdaq 100, 138 down on the Nasdaq Composite, 59 down on the S&P, 32 down on the Russell. The VIX is up 31%. And see, here's the thing. This is just not, the momentum to the downside here just isn't giving this a chance. Like, there is no long play here. Like, any long plays that present themselves are very fleeting. Clearly, you would not want to be long of this market. I'd rather be short of it. So it's picking that spot where you have decent trade location. All right, so look at this. It did catch a bounce. So it finally did let up. The selling pressure did let up. We're now seeing a reversal. I still don't think we're done for the day. There's 45 minutes left in the session. Now this is scary. Didn't realize my cat was in camera. Even if you give it the benefit of the doubt, and you draw it this way, this is still a really scary drop, or this is a scary picture. Because that's a 4,000 point move. Potentially, a 4,600 point move. That would be an 18% move. Dow's off the lows of the day. We're doing 545. We were down 6 and change at one point. In all honesty, I'm comfortable with how I'm positioned going into the weekend. I might make a minor change. Monday for me is the day of truth. That is the day where I decide, do I get aggressively short? Do I get aggressively bearish this market? I don't short stock, I use options. If I want to short the market, I'll sell a call spread, or I'll buy a put spread, or buy puts. But Monday is that day. I just posted on Facebook the comment about how this is the worst one-day drop since Brexit in 2016. One of my friends commented, it's a buying opportunity. And it very well may be. I mean, don't get me wrong. I don't think that you're going to be happy. If you buy into this market now, I don't think that you're going to be happy for a while. Like, I just don't think that. I just realized my camera was so dark. Not that anyone cares if they can see me. I doubt you do, but it makes me feel better. Having said that earlier about this not necessarily being a buying opportunity, I would start getting together a shopping list. Don't execute on it right away, but I would start making a shopping list. For me, it's going to be Google. For me, it's going to be Amazon. For me, it's going to be maybe some Apple. I don't want to load up too heavily on tech. I'd have to take a look at pretty much everybody's gotten hit. I'm sure, pick a name. Boeing, down. And Boeing's been an absolute juggernaut. Nvidia, down. Down 2%. As we wait for data. We're about to get another gift. I think. In the form of a selling opportunity in the NASDAQ futures here. Because this is topping. Okay. So looking at this, I probably want this to break below the 9-period MA. And stay there. I mean, I'm getting this signal here. This is telling me, which it just did, but I gotta balance that against there's still some upward momentum here. And that's a sell. And if this shows you anything, there's no such thing as perfect trade location. Like it rarely, it never happens. Rarely, never, whatever. But it's going to move against you to an extent when you get in. You just have to determine before you get into the trade, what is that point at which you acknowledge that you're wrong? Like, where does it have to move to? You know, for me, it would have been back above that 27-period MA. That would have told me, yeah, Tim, you were really wrong. Like, you got in way too early. But see, as this stands right now, once my full K, which is about to do, crosses below the 80, I think it's time to get out. Maybe. I mean, I don't want to wear out my welcome. So that was a good trade. That wasn't the best. I mean, I'm not happy with my exit. Like, it wasn't soon enough. That's the best result we've seen all day. Which is how I keep score. I'm confident in my call where the market is heading for the rest of the day. I just don't want to be overconfident about it. My projection is that this is going to be an ugly close. The Dow's down 610, 605, 603 now. So it's back above 600. I shouldn't say above, but it's now 600 plus down again. I don't really want to see a ball. Okay, why am I not right-clicking? Just about everything I'm looking at here is pretty close to the lows of the day. The only exception being coals. But if you look at the move, like the entire day's move, this is just a blip. It's, but it is a standout. I mean, Apple, Autodesk, Intel. Amazon. not at the low of the day. Quite a bit from it, actually. Surprisingly, this chart on Google, this surprises me. Because just about every other, with the exception of Amazon, because Amazon was not punished the same way Apple and Google were. I mean, it's still up on the day, not nearly what it was before. So here's the question, what to do about Autodesk. Just about everything I'm seeing tells me that it's more pain ahead. When I had first gotten into this trade, and this was certainly a realistic expectation, there was a possibility I expected Autodesk to kind of, as it moved up, as it recovered, to kind of fill this gap or come close to it. It's come to about here, and now it's just fallen off a cliff. I think I'm going to wait until Monday. Although for what, I don't know. Because this short call is only worth 11 cents now. I sold it at 70. I'm gonna wait for another 22 bucks. I got, you know. I do still think I want to see what Monday holds for us. Before I make any decisions on that last position. Looking back on that trade we just did in the NASDAQ and the mini NAS, I got in about here. I probably got out there. Somewhere around there. Which was a good time to get out. Like, I missed some of the downside, but I also didn't stay in too long to give it a chance to rip against me, because look what it did then subsequently. See, I think right now what it wants to do is it's going to head up to about here. Bounce off this moving average. Which is about 67.86. So it's a little bit below this 3. That's a 3-period average right there. I'm not sure how comfortable I am being in this right now, to be honest with you. And that did absolutely nothing for me. That was a waste of commissions, basically. See, here's what the problem was, is again, it was already down here when I got in. So it was hard to tell whether this is one of those, it's going to continue to go down despite it being oversold here. So, if I had just waited, like, look, now we don't know what this is going to do, but this is looking like it's going to start making another move back up. That's not going to change what we see here. It's not going to change what we see here. We got 8.5 minutes to go, and the cash market will close. Futures will trade for another 15 minutes, so 4:15 Eastern. Then they take that 15-minute break, resume trading again at 4:30, and then they go until 5, and then we're done for the weekend. Then we start back up again at 6 o'clock Eastern time on Sunday, which the Super Bowl will still be playing, so I won't be trading. I don't know what you'll be doing. Or no, the Super Bowl. I don't think the Super Bowl started yet. Let's see what kind of channel forms here. I don't want to ruin a good thing by making a bad trade here in these NASDAQ futures, even though I think I know what's going to happen. I think we're going to travel down here to about this 67.60 level, which is in our 10 points, 11 points now. We got less than 5 minutes to go. I think in that last 15 minutes between 4 o'clock and 4:15, they're probably going to see a little bit of a relief rally. Then when the markets open back up at 4:30, I think it's going to be just down. That's going to set the tone. What the heck? That was a bad idea. That was luck. That really turned against me. It could have been ugly. So, sometimes the gut flag's right. If you're going to take on another trade, it's got to be something that adds value. I'm not saying this one didn't, it's just the risk that I took to make it was not prudent. I mean, you saw how much it moved against me in a matter of seconds. Got a minute 18 to go. And the selling is now accelerating into the close. This would not be a good time to get in. Less than 30 seconds to go. Ten seconds to go. Cash market. 3, 2, 1. Ding, ding. So, final trades are settling out in the cash market. You can see that the indices are still fluctuating as settlements occur. All right, so here's what it looks like the final numbers are for the day. This is worse than Brexit. Okay, the day after Brexit, June 24th, 2016, was 520, 530, something like that. We're down another 130 points on top of that. Now, in terms of percentage, I didn't calculate that. I just looked at the absolute point move. Okay, and likewise for the, if you went back and looked, I'll bet you that this was a worse day for the NASDAQ 100, the NASDAQ Composite, the S&P, and the Russell. Not a good day for gold. Gold was down 1%. Okay, great day for VIX. VIX was up 30%. Crude down. The 10-year note, futures on the 10-year note was down. So down 2.5. NDX was the NASDAQ 100 down 2. NASDAQ Composite down just under 2. S&P down 2 and 2.2 and 14 100ths. And the Russell down 2 and 5 100ths. So today was an interesting day. This is a day I've been waiting for a long time. It's just, if you look at the VIX, and what it's been doing, for most of the year, it's been compressed. Like if you were to look at where it spent most of its time, it didn't work. Okay, not sure what I'm doing wrong. Okay, we're not going to mess with that anymore. Here's the bottom line. That looks like about a good midpoint. It spent most of its time below 12, right? It's been as low as 8 3/4, 8 and 8.5. If we take a look at the entire history of the VIX, from when it was incepted, right? Like that is an all-time low. You know, the all-time high was 1987, right? You'd expect that, Black Monday. The all-time low occurred in the month of November. So here's the Great Recession in 2018. And if you believe this, like it could conceivably go lower. Like there's nothing stopping it from going to zero. Now, that would be remarkable, but I mean, I never thought it would go below like 9.5. I never thought it would go below here, this level. So anyway, that's enough of that. So like I said, it's time to start putting together your shopping list. I wouldn't pull the trigger just yet. You know, if you're comfortable playing on the bearish side, if you're comfortable, you know, selling call spreads or buying put spreads, you know, start looking at that. I do believe that this is going to be an opportunity to buy. I just don't think we're there yet. I don't think Monday is the day that you buy. I think from everything that I'm looking at that we got more pain ahead of us before things turn around. If you look at the indices themselves, if you look at specific companies like Amazon, like Nvidia, the move up has been parabolic, and there's some need for some reversion to the mean here. You know, and unfortunately, when things revert to the mean, they overshoot in the opposite direction. You know, I don't know whether that's going to happen now, but that is something that does happen. So, you know, we'll see. But start putting together your shopping list. I know I will be. I'm also going to be taking a look at what do I want to do to play the bear side for the next week or so. I think. I don't know if it's volatility because I've tried volatility plays and I've gotten burned. It doesn't seem to be gold. It doesn't seem to be the yen. You know, I don't know what the Swiss franc did today. That's another safety play. It was down 0.4%. So anyway, have a great weekend, everybody, and I will see you all on Monday.